Okay, good evening again, everyone. Thank you for being here this evening. For those of you who do not know, my name is Dave Condi. I am the ministry coordinator here at First United Presbyterian. Thank you for being here, and just a couple of housekeeping issues. If you need to use the little boys or girls room, that would be down the hallway to your right as you leave the sanctuary. Make your first right, and then the doors will be on your right. Refreshments will be served right after our forum, and our panel will be joining us for refreshments after the forum as well. So if you have a question that you want to ask, but you don't want to ask it publicly, you can catch one of these fine folks in our fellowship hall right after the forum and ask the question then. Let me see. We'll get to the panel in just a moment. All right, yep, I guess we'll just dive right in. So I'm going to, actually, before we do anything, let's do what you guys came for, the whole reason you're here. The door prize, right? That's the reason everybody's here. Did everybody get their slip into the basket for the door prize? Oh, you got a moment. You want to go do it? Okay. Well, in that case, I'm going to invite Dakota up front. Dakota is with the Southeast Nebraska Collaborative. They are our generous sponsor for the evening. So I am going to let you tell them who you are and what you do.
Hello, everybody. Again, my name is Dakota Howe, and I am a resource manager for the Southeast Nebraska Collaborative. I get the pleasure of serving Jefferson, Thayer, Fillmore, and Saline counties. Born and raised here, so this is where my heart is. Our collaborative, we have different programs and resources for youth, young adults, families, also some connections for seniors in the community as well. And it all does kind of tie into housing and basic needs, and we are just super excited to come and talk to you about all the things that we can offer.
Okay.
Okay.
Right now they're thinking that's all great, but get on with the prize, right?
Let's get this on, yeah,
right,
let's do it.
Why don't you reach in here and grab the lucky winner. Make sure it's me. Okay, who is it?
This looks like Jane Campbell.
Jane Campbell, we know her.
Jane Campbell.
Come on down, Jane.
I can take it.
Oh, she's... Well, it'll pay the taxes on something.
Thank you.
Now everyone's going to leave. Let's see. Okay, well, I'd like to first just get to know our panel a little bit, find out who they are and a little bit about them. So I'm going to ask each of you, and we'll need to pass the mic to whoever's going first, to just introduce yourself, tell us what you do, why you're here, and maybe a little bit about yourself personally so we can learn about you.
Good evening. My name is Ryan Bailey, and I work for Blue Valley Community Action. I have worked there for 24 years, so it is kind of my passion. Something about me, I have lived in Fairbury for 30 years, but I'm originally from Loveland, Colorado, and I miss it a lot. I miss the mountains and the cooler weather.
I'm Twyla LaCure. I manage Parkview Apartments in the Fairbury Housing Authority. I've been there 10 years. I'm a mom to two gorgeous redheads, so that's kind of my claim to fame locally. Very proud of my girls. And something about me, when I was 8, I played basketball with the Harlem Globetrotters, so I always think that's pretty cool.
That's like super cool.
I cannot follow that. My name is Kim Clark. I'm the housing director of Blue Valley Community Action. I have been there this go around since 2006. And like Ryan, I'm also from Colorado. I'm from Denver. We moved here with my family in 1984, and I've been around pretty much ever since.
My name is Jeff Hammer, and I was born and raised in Jefferson County, Reynolds, Nebraska, just down the road from here. I am currently a senior vice president, senior loan officer for Bruning Bank at our Bruning location, and I'm also past residential mortgage director for our bank. Something about me, I enjoy music, entertain, and also I enjoy the great outdoors.
And he didn't bring it with him, but he plays the accordion, so that's a lot of fun. Okay, well, we're going to dive right in here. We have some questions that we're going to ask you, and as I ask the questions, I will direct the questions to the entire panel. You can determine who's going to answer it. At the end of the forum, after I've asked the questions that I have, we will open it up to the audience and you will have an opportunity to ask your own questions if I didn't cover what you'd like to know. So we'll just start. Could you give me a general idea of the available rental housing that is in or near Fairbury?
I have this practice. Okay. I do have a handout that I need available in the other room, and I apologize now if I left anyone off the list. This was put together very quickly, but there's 3 basic types of housing that I address in the handout, and the first of which is the market rate rental options. And so this is, you go to the apartment, it's at this rate, and this is what's available in that property. And we have a number of properties in town. I think around 250 units in total that qualify in that basic category. With that, there are private landlords, and I have listed some of them below that have either duplexes or private houses. And this is not an entire list. There are some people I have omitted, but it was not my intent. In my realm, and in the realm that some of us are here in, there's also the affordable housing realm, and Parkview Apartments is absolutely a part of that, but so too is Fairbury Gardens and then the Blue Valley Community Action properties here in town. And then we have housing that we would call for more special populations, either elderly and disabled, or disabled populations that address special needs for those households.
Would anyone else like to chime in on that? Well, you provided such a fantastic answer that nobody else had anything to say. That's wonderful. So generally, is there rental housing available in our town, or is it often fully occupied?
It depends. It really does depend. Household size makes a big difference in how easy it is to find housing. You'll see around town, yes, my building and other properties are accepting applications. I do think a lot of times you'll find that those tend to be the smaller units that are available that house 1 to 2 people. What you don't see typically is a lot of availability when that household needs a 2 or a 3-bedroom unit in particular. That's one that's in very short supply, and it doesn't matter whether you're in the affordable realm or you're in the market rate. That's just in very short supply in this community.
So those of the larger families might have a little more difficulty finding housing. So.
Yes, absolutely.
So is there advice that you would give to someone who's looking to find rental housing in our community? Is there a way to make sure that are there steps that they should take to make sure they find a place that's safe and habitable, that is going to meet their needs?
Well, I think one of the best ways is to ask the landlord if they have their certification through the city. I'm actually a fan of that program because it forces landlords to meet a certain set of standards. And those standards may seem pretty basic to an awful lot of us, but prior to that, there were a lot of rentals available that didn't meet the basic needs. And so I would ask, does that exist? And beyond that, ask questions about how maintenance is handled, how different situations are handled within that property. And if you don't ask those questions, no one's going to answer them.
Makes a lot of sense. And you mentioned that there are affordable housing options available, and I know enough to know that those would, by definition, meet a certain standard because HUD or the whatever program is running it would require that. But so there's basically a program, it sounds like, for market rent housing as well that the city maintains.
I believe, and I can't speak to this exactly, but I believe you get a certification or a license for the unit, yes.
The mayor is nodding yes. Okay,
Yes.
good.
Okay.
Excellent. And what does someone need to do to qualify for rental housing? What types of things do we look at? Are there credit checks, background checks? What types of things should they consider?
Every landlord wants to see a history of paying the rent. Every landlord wants to see a history that when you leave a property, A, you've given proper notice, but B, you've also left it in a way that doesn't require extensive rehab or repair. They also, the credit, I'm affordable, so you know, I do give consideration when there's high medical debt or other things, but are you generally making good effort to pay your bills? I understand people get behind, but the reality is if you're not paying your bills, I'm going to struggle, and so are the other landlords. They're going to struggle to figure out whether or not you're going to pay them.
Yeah, that's kind of a no-win situation, I would guess.
Yes.
What about like are there criminal background checks typically?
I can't speak for other properties. Yes, I run criminal background checks. You know, fair housing dictates what I can and cannot do. You know, we're not looking at every charge or charges pending. We are looking at convictions, and we focus primarily on felonies. And, you know, not all felonies are the same, and some are much older than others. And so it's really, HUD has taken out this blanket, you can do it one way, aspect. You got to look at every situation and apply the best decisions that you can make based on the information that you have.
Makes sense. Well, I think we beat up on you long enough, so we're gonna move on to another question. So I'm gonna assume, you know, I've been renting in this town now for a few years, right? And I want to buy a house, or I'm thinking about wanting to buy a house at some point. So for someone in that situation, someone who aspires to one day own a home, but is a renter currently, what kind of advice can you offer them?
I think the first thing I would advise is talk to a housing counselor. HUD, which is Housing and Urban Development, has a list of certified housing counselors in every state, and there are just a handful in Nebraska, but Blue Valley has one on staff. I am a certified counselor. And so that would be my first recommendation, as early as possible in the process.
Okay, tell me what a housing counselor does. That's
So a housing counselor is just that. They counsel you on any type of your housing needs. It could be rental, home, buying your first home, or default assistance if you're in default, foreclosure prevention. A housing counselor will meet with you one-on-one for an hour or however long it takes, and they will look at your budget. They will offer recommendations on how to trim that budget to make it a more affordable budget. They will pull your credit report, look at your credit, discuss that report with you and how to raise that credit score and get your credit cleaned up. We are not a credit repair company. I just want to point that out. A lot of those are fraudulent, but we will certainly offer as much of the advice as we can to help you towards your end goal. We will set goals with you. We will set the small attainable goals to begin with, and then follow up with you every 90 days. If you did not meet a goal in that 90 days, we're going to say, okay, why, what happened? Let's refocus.
Okay.
If you did meet that goal, we'll set new goals.
So you will essentially help them see where they need to get to in order to achieve that goal of home ownership, and then work with them and walk with them along the way.
Correct.
To kind of make sure they get there. Now, you mentioned you pull credit report, but I do know that when you pull someone's credit report, it gives you something called an inquiry, and that can hurt your credit report. So what happens then?
Well, because we are a HUD-approved housing counseling agency, we're pulling that for education purposes, so therefore it's considered a soft pull. We have a contract with Experian, and they have agreed to, because we're a housing counseling agency, that those pulls are soft, so it does not impact your credit report.
Okay, so soft pull doesn't give you this inquiry thing.
Correct.
Okay, that helps. So when should someone think about meeting with a housing counselor? I mean, is this something I should do if I don't think I can buy a house for a year or two, or should I wait until 2 weeks before I apply? When is a good time?
The best time to meet with a housing counselor is as soon as you have an idea that you may want to own a home someday. It's never too early to begin that process.
Really? Okay. So as a housing counselor, what types of things do you counsel people to consider? Like let's say you have someone who in a month or two you think that this person's ready to apply for a mortgage. What types of things is the bank going to want from them? And Jeff, this might be a question for you. I don't know.
One thing, and then I'll pass it to Jeff to answer the rest of that. One thing that we tell them to consider is, we'll go extensively through what are your wants as far as in a house or in a property, what are your wants versus needs. What can you afford versus what you want? So we will talk a lot about that, and then I'll let Jeff answer what the bank is looking for.
So we are looking for initially a credit score. We pull a housing tri-merge credit report whenever you apply for a mortgage, and that pulls from the 3 major credit bureaus. And most banks are going to use the middle low score if you're applying jointly, or if you're applying individually, the middle score of those 3 bureaus. Minimum credit score can vary by bank, some as low as 580, some 620 is a minimum. Our bank happens to have an underwriting overlay of 680 for all the products that we offer as a minimum score. We will help applicants build up their credit score, give them ideas on what impacts the credit score if that's necessary. Also, if we're working with an applicant that does not have a credit history, for example, and this would be true amongst most banks, they can help with non-traditional credit, building a profile. And that'd be from looking at telephone bills, rental payment history, other kinds of monthly bills that are paid. And if they can establish a timely timeline, they can establish non-traditional credit for an applicant that way. The next thing would be down payment. That's probably one of the biggest things, one of the biggest factors as far as what a bank is looking at for the plethora of mortgage products that most banks carry. The amount of savings a person has for reserves, and when I say reserves, that would be, as Kim and I talked about yesterday, we met talking about what we'd like to see an applicant have, 6 months worth of principal, interest, and taxes and insurance coverage. Beyond that, a lender is still looking for more than 6 months of reserves. The more reserves that a person has, and I'm talking about savings, IRAs, 401k, any kind of money that could be liquidated if need be or had to be in a state of an emergency. We calculate how many months of reserves a person has. So when you say, well, what kind of, or ask the question, what kind of mortgage product would I qualify for? There are many different kinds of mortgage products, and we can get more into detail in a little bit on that as well. The other thing would be a person's debt to income. So the more monthly debts you have compared to your gross monthly income, that's a ratio that we look at. And as a rule of thumb, 41% is kind of a maximum debt to income ratio. A person needs to have less than that and to qualify for a mortgage loan.
Okay, so you said a lot there, but so if my credit score is 9 and I have $6 in the bank, I should go see Kim first before I talk to you. Okay.
Absolutely.
All right, so I just wanted to make sure I understood that. So savings, something in the bank, so the bank wants to know you have liquid or funds that can be liquidated in the event that they would be needed. Credit score, and it sounds like they're really important. And the debt to income ratio, so you don't want to have too many obligations versus what you make. Is there anything else that we need to be thinking about or that the bank would be looking for?
Mm-hmm. So a person's level of income can make a difference on which product to look at for that applicant. For example, if they're a service member, maybe the Veterans Affairs VA loan might fit. There's some preferable terms with interest rate and down payment with that program. FHA, that's a Federal Housing Authority. There's some beneficial terms with that program. USDA Rural Development Loans. There's some leeway with debt to income ratio on that. That can actually go up to, well, I take that back. That FHA is up to 50%. RD, I think, is 41%, just like the conventional mortgages. Anytime you don't have at least 20% to put down, then we look at products that will either assist with down payment or where you can borrow closer to 100% of the purchase price. And the direct government loans do help accomplish that.
Okay. All right, we're going to come back to those types of questions, but I'm going to flip it back to the other side now and ask this. Now, I'm a renter, and I just told you I have a credit score of 9, so this is probably not going to surprise you, but I find myself in a situation where I can't pay my rent. My rent's due, let's say it was due yesterday, and I didn't pay it. I can't pay it. What do I do? Do I just start packing up my stuff?
Yes.
Okay, well, there you go.
Just kidding. So I'll let Dakota speak too, but for Blue Valley Community Action, we operate under what is called the principle of housing first, which means that we believe that every human has the right to housing and to not be homeless. And so our first priority is to stabilize people in their home whenever possible. So the first step would be obviously to come into the office and meet with our staff, and we can look at the situation that you are in that got you to the point of you're worried about losing your home, whether that's tomorrow, which happens often when they come in the office, or whether you see that 30 days down the line. So there's a lot of, to use a buzz term, or a lot of wraparound services. There's more than just providing a rental assistance payment for somebody to stay in their home. There are other things that go with that. There, obviously, as I said, there's the reason they got to that point, but not only maybe they are about to be evicted, but they also need food. We do intakes and assessments, and maybe their children haven't been enrolled in Head Start yet. Maybe there are other programs and services that we can connect them to when they really just came to us initially for help with their rent. So it's a process, and we do have different funding sources. We have some government HUD funding sources that have some pretty strict guidelines that we utilize, but we also receive donations specifically from churches where we can help those folks who are just kind of in a rough patch right now, and maybe with a little bit of help, a little bit of services and guidance, they can get out of that. That's our main goal, is to get people stabilized. And then after that, if we can get them moved up and more stable and more secure, that is our goal.
Well said. Okay, so similar to what Ryan said, so when we have somebody come to us, we do an intake. We also see, what's going on. We do a budget. We say, hey, you're going through this. We notice that you don't have food security. So let's help you apply for SNAP. Let's guide you to those resources to help you through this time. Just as well, we also have different funding sources where we have, different supports that we can also offer financially. And a lot of times we're doing some financial literacy coaching, digital literacy coaching as well, to help them build skills to find those resources. And to touch a little bit just specifically on, you don't have to go and pack your bags and rush out of town. That's not the case. That with communication with us and the landlord, the Nebraska Rental Assistance Program can then sometimes be a great help right now. For those who aren't aware, during the height of COVID, there was an emergency rental assistance program that was initiated, and tenants that were behind due to COVID-related instances could have past due rent and utilities paid. That did end, but has recently, at the end of September, was brought back, thankfully, and now tenants can then again apply for this assistance. They can receive up to 18 months total, that is including if they received any assistance during ERA 1. So if they received 12 months during the pandemic, they can receive another 6 months total. A household can actually receive $30,000 of assistance for past due rent, and then that can also include up to 3 months of future rent when they apply. $4,000 of that can also go to utility companies. There are some income requirements. It goes off of the area median income. It does make it pretty easy to qualify. Those guidelines are pretty well. We start off at about $46,600 for a one-person household. So if it's, as long as they can attest that they have had either a significant change in income or a direct loss of hours due to COVID or indirectly due to COVID, they can potentially qualify for this program.
Excellent. And I think I mentioned to you before, I was in the property management industry for many years, and I was not aware of many of the programs that you talked about. I didn't know there was an emergency assistance program available to help tenants, and I would have loved to have been able to, folks that were struggling to pay their rent, just to collect the rent would be beneficial, but also to help them and point them in the right direction. So that's great information, and I appreciate that. I'm going to ask the same question, but with a slightly different twist. Now, even though my credit score is 9, Jeff was foolish enough to give me a mortgage. And so I'm in the same situation. I'm unable to pay, but now I have a mortgage. I'm not a renter. I own a home, and I can't pay my mortgage. Is there something that can be done?
So as far as the collaborative, like I said, we do have certain funds. We may not be able to pay the mortgage. However, if there is a utility bill or some other bill that we can cover, we do some gap services where if we can help you pay, $200 of this utility bill, then you can free up some funds for your mortgage to help from falling so far behind. Who's next?
And the key to this is always contact the bank right away as soon as you're running into problems. Once you become 30 days past due, federal regulations have it as such that we send out a packet of housing counselors in the area that can be contacted. And so in that case, the customer would probably be getting with Kim to discuss counseling and setting that option up. And as long as the customer is communicating with the bank, giving the bank a strategy or a plan, a written plan usually is what the bank is looking for, we can work along, figure out if we need to do a note modification, maybe skip payments for 3 months while the customer is looking for a new job, or maybe go to interest only for a while and put those payments on the back end of the loan, or catch them up at a different period of time. And it could be as such that the customer is just going to be 40 to 60 days late at all times for an extended period of time. As long as the bank knows that that person, that individual is trying to resolve their situation, most of the time the institution will work with them. It's much easier to work out a plan, have a little bit of money trailing in on the mortgage, and rather than go to a foreclosure option.
Okay, so it sounds like, we heard from Dakota and Ryan from the rental side, and both said we need to communicate with the landlord and with you guys, and it sounds like it's very similar here. So communication is kind of the key. It's if there's a problem, contact the bank, and it sounds like the bank will oftentimes try to work with you and try to make things happen. That's good to know. I think that a lot of times we don't, right? If we can't pay a bill, we just don't answer the phone. but despite that, the best thing is to really just have that open line of communication with the bank. And you mentioned note modification. How does that look? So you said something about interest only, or maybe taking payments away. So is that essentially what that is? Like you would just skip payments or reduce the payments?
Right. So in an option with a skip pay, usually that's 3 months at a time of skipping payments. Those go on to the back end of the mortgage loan.
Okay.
And typically the institution, the bank, will ask for the customer to fill out an application with updated information about their income and their assets and liabilities. And then they assess the situation from there as to what kind of modification or terms they may be able to work with.
Gotcha. Excellent. Anyone else have? Yes.
I would just like to add that it's really, really important. The minute you know you're going to be late or you're behind, let's not wait for that 30-day letter to come. Contact your lender. I know it's really tough and I know it can be embarrassing. So if you feel like you're having a really hard time, contact contact us at Blue Valley for a housing counselor. We'll get on a three-way call with you to your lender, and most lenders will talk to us as long as you're on the call, and we'll talk to them with you and on your behalf to start the process to get things worked out.
Okay. All right. Well, while we're actually on this subject, I'd like to talk a little bit about interest rates. I think that's something that interest rates have a profound effect on how much we pay for housing. So what's the easy one? What's the current interest rate that one can expect to pay for a mortgage in this market?
So in this market right now, we typically quote a 15, 20, and a 30-year mortgage. 15-year and a 20-year very close in interest rate right now, and somewhere between 6.75 and 7% would be pretty average for the area. A person does have the option with most bank institutions to actually buy down their interest rate as well. And we talk in terms of points. So 100 basis points is equal to 1%. So if you pay 1% of your mortgage amount, you could buy your interest rate, for example, from 7% down to 6.375%.
So by buy it down, you mean you're paying this, it's essentially a fee.
Essentially a fee for buying down the interest rate up front. Yes.
Okay. And earlier you had talked about down payment, and I meant to ask you then and I forgot, so I'm going to circle back to it. You mentioned down payment is a big thing that the bank considers, but, and this is a question for you and for Kim, I think. But down payment's not the only thing that somebody who's looking to purchase a home needs to consider, right? Because there are other costs that they need to keep in mind. I mean, closing costs for one, probably having an emergency fund. I mean, is there a percentage? Well, I guess it varies because you said that each mortgage product has a different percentage that it requires down. But let's just say, we have that amount. That 5% is going to be the down payment. How can someone know about what they need to pay for closing costs or potential closing costs?
And that can vary greatly between mortgage lenders. It can make a difference if you're talking to a local community bank or a Rocket Mortgage or a federal credit union.
Okay.
They all have different underwriting costs. The general costs, though, hard costs such as title insurance, appraisal, those sort of fees, those have to be passed along to the consumer at what it costs the bank. There's no room for adding any cushion to that.
Well, good. Now, you mentioned interest rates, but not everybody pays the same interest rate.
Correct.
Why is that? What kind of things can affect the interest rate that we pay?
Sure.
Besides my 9 credit score.
Right. So typically there's a matrix different institutions use for the mortgage amount itself. So the higher the mortgage loan amount, usually there's a break in interest rate. The higher the FICO credit score, there can be breaks on interest rate there. The credit score, of course, can be into play there. And then the down payment, amount of down payment, whether it's a conventional loan. Conventional loan would be explained as anything with 20% down or 20% down if you don't have quite that much. There is down payment assistance with some of the programs if you don't want to go with a direct government loan. Let's say you've got good down payment, good credit score, you've got 15% down, and I know we haven't talked about private mortgage insurance yet, but if you have less than 20% to put down, you have to have private mortgage insurance that you pay monthly on your mortgage. That's an added expense, and that's why in the market, if you can afford it, it's always best to have 20% down. If you don't have that, that's where, if you don't have 20% down, the FHA or VA or rural RD, rural development housing loans can be beneficial for those kind of terms. Let's say you have 10% down and want to go with a conventional loan that might have a better interest rate, and you're not a veteran, and there is something out there through the Federal Home Loan Bank system. It's called Turnkey, And because of the inflated prices of housing right now, any banks that offer the Federal Home Loan Bank offerings, a person can qualify up to $15,000 to be used for rehab and down payment. And that's called the turnkey program. It can be for first-time home buyers, or if you make less than 150% of area median income, it can be for a second or third home. And not a second or third home ownership, but I'm talking about after you've sold your primary home and buy your next home.
You mentioned private mortgage insurance, and I know that that is something you told us that if you don't have 20% down. So let's say someone doesn't put 20% down, so they're paying private mortgage insurance, but then they reach a point where they have now, their loan to value is below 80%, so they've achieved that 20% threshold. Does that fall off, or do they have to call their bank, or do they have to refinance?
Right now, most mortgage companies will say that it has to get down to 78% loan to value, and you must contact the institution to request it to be cut off. Other programs, it'll just automatically fall off at 78% loan to value.
So tell me a little bit about how interest rates are set. Do you and your banker buddies just have a meeting and just get together and decide what they're going to be, just pick a number out of the air? Or is there, how do we determine what the interest rates are going to be?
So interest rates are basically determined by the 10-year Treasury market, and then also our Board of Federal Governors. There's 7 governors from the United States that gather. When they have their meetings, they look at inflation, core inflation, unemployment, and they try to set a federal rate that's going to affect basically everything in the economy. Cost of credit cards, revolving credit, to car loans, to mortgages, and so a lot of it is determined from the judgment that's made there.
And I believe that's called the prime rate, right? Is what
Correct.
they said. And but the prime rate's not what we pay, right? We're not. We pay something higher than the prime rate. I think the prime rate is really what banks lend each other money at, essentially.
Right. And
So how is it determined? And it might be too complicated to answer here, but we can try. How do they determine how much more than the prime rate we're going to pay?
So the prime rate right now is 8.5. Mortgage rates are determined more off of, like I said, the 10-year Treasury
Okay.
and economics. Those rates flex, they change daily, sometimes several times a day.
Okay. So we're paying less than the
Markets.
prime rate.
Yes,
Oh,
less than
well,
the prime rate.
fantastic.
Now, if you're asking for a home equity line of credit, that is something that's like a revolving credit card. A lot of times those are priced to prime. Lending institutions will say, okay, here's a revolving line of credit, works just like a credit card, but your interest rate is going to be, say, prime plus a quarter or equal to prime. And it's a reduced rate because a credit card, anywhere from 15 to 30%. And because a HELOC, a home equity line of credit, is secured by real estate, you get a preferable interest rate on a product like that.
Okay, so it's kind of like a refinance essentially, but it's not. But it's in addition to your primary mortgage.
It can be in addition to a primary mortgage, or you can have a first mortgage home equity line of credit if you don't have a mortgage on your home.
Right. So those of us who have, who might have purchased a house 3 years ago, 4 years ago, whatever it was, and the rate was so low. I mean, it was like 3% or even lower for some people. So they're not going to want to refinance in this market. That wouldn't make a lot of sense, I wouldn't think. So for them, if getting cash is the goal, then a HELOC, a home equity line of credit, might make a lot of sense.
Right, so a HELOC would make some sense. Leave that first mortgage in place if it's at 3 or 4%. Yes, you're going to pay a higher interest rate on the HELOC. The other option is to take out a second mortgage term loan. Most of those can be amortized up to 20 years. And it's a second mortgage behind the primary mortgage. In today's market, those are going to be like between 6 and 7%. And it's just an option to be able to pull cash out using your equity and not having to touch your first mortgage.
Okay. And is qualifying for one of these, either HELOC or second mortgage or refinance, is that harder to do than a primary mortgage? Is it about the same? Is it easier?
It's about the same. You apply on the same type of format as a primary mortgage loan. And the difference is most of the second mortgages or HELOCs, the maximum loan to value can be anywhere from 70 to 80%. Our bank happens to go up to 90%. I know that's an exception to the kind of the general rule on HELOCs, but it's based on credit quality, credit score, and of course the real estate itself.
Excellent. I believe that I have exhausted the questions that I have for you. Anyone on our panel, before I open it up to the audience for questions, is there anyone on the panel who would like to say anything that maybe they wanted to say earlier and forgot, or I didn't address? Now's your chance. Okay. In that case, I will turn it over to our audience here for any questions that you might have. If you have a question, I'm going to ask you to approach the microphone here and ask that question. A couple of caveats. If your question is personal to your situation, the panel will not be able to address it in this public forum. So if you have a question that is personal, as I said, our panel experts will be joining us for refreshments in the fellowship hall after this forum, and you can certainly grab one of them there and ask them that more personal question. We also won't be discussing political views today. So if you have a question that is political in nature, again, we'd love to talk to you about it privately. We all have our views, but this is a forum that is about information and resources, not politics. So with that being said, are there any questions for our forum? Are they really going to make it this easy? Oh, looks like we have someone. Come on down. Oh, could you approach the microphone, please?
Well, I will say one perk is that I get to work from home, but I do meet people in public settings. We utilize the library. We've utilized churches. I've set up at the Methodist Church during their play hours on Wednesdays for families that if they have kids at home, and that's, not necessarily an option. We've done some sessions there. Again, I do also travel to Fillmore, Thayer, and Saline 2 days out of the week, but Monday, Wednesday, Friday, I am here, and I will. Yes, MyLink. Thank you. I did not bring it up here, but our collaborative have been building this amazing resource hub called MyLink for the past 3 years, I think we're in, and we have nine Southeast Nebraska counties on that resource hub. It is an app. It can be downloaded on your phone. It doesn't have to have the data to be utilized. Another perk that I always love to share is that if it's used in a browser, it also can't be tracked. So if you're in one of those situations where you're looking for help, but there is just an abundance of resources, including our contact information. Blue Valley's programs are on there. All of our contact information should be on there, and if you do have resources and you do not see your resources on MyLink, definitely reach out to me and we will get you on there.
So last month's panel, all of our experts were from the same organization, which was Jefferson Health and Life, so it was easy for me to put the contact information on the slide. Unfortunately, they all have different contact information, so my email address is up there. So if anyone would like to get a hold of anyone from our panel, you can absolutely catch them in the fellowship hall right after this forum and ask them for their contact information or business card. Otherwise, you can email me. My email address is up there. I have all of their contact information, and I'll provide it immediately if you do that. Are there any other questions that we can answer today? Yeah, please come forward if you're going to ask a question. You can form a line right there at the microphone.
Workforce housing is kind of a buzzword around town. Just kind of curious, what do you guys think the future of Fairbury workforce housing is? And maybe for some people here, how do you qualify for workforce housing? What's the limits? What are the
The housing study completed in 2020 spoke to, at that time, the city of Fairbury was short 144 housing units, the bulk of which they consider, a portion of that is obviously home buyer, but as far as rental housing, a significant portion of that is a shortage on the rental market side. And then it gets a little more complicated when you're trying to right size the housing environment for the size of the family. It's very pent up. But yes, workforce housing is going to be the game changer for the communities who figure it out. And it's going to be to the detriment of the communities that don't figure it out. We need more housing options. We need more diversity in the housing stock. We need bigger bedroom counts. We need income properties that go beyond who I serve at a higher price point, because I have learned in 10 years, it stuns me who's actually homeless in this community and who does not have resources available to them, and that person makes more money than you might think they do, because those housing options are in very short supply in this community. That being said, we are of the size of community that we need to understand what the market will bear, where our needs are, how many units we think we can reasonably fill. But the reality is construction costs all by themselves. You can't build a rental property right now and charge a reasonable amount of rent of what the market will tolerate and even begin to hope to pay the mortgage on that property, let alone be able to rent it and turn a profit, which every landlord needs to have some type of profit retained. And so the challenges are how you layer in the grants that are available and how you partner with other people to leverage these opportunities, because it's going to take more than one person at the table to make workforce housing. But Fairbury is a beautiful community and it has a lot of opportunity available to it. But if we don't figure out how to house the people who are trying to work here, whether it's at Weston Foods, the hospital, the school district, small employers all across the community, everybody's going to struggle to hire, everybody's going to struggle to retain, and so goes the community, I think. So hopefully that was...
Unfortunately, I don't have I know you asked about income guidelines and qualifications. If you would like to contact me at the office, I don't have those figures in front of me, so I can't answer that for you. But I can tell you that I do know that workforce housing is a huge topic statewide, specifically with the Nebraska Department of Economic Development. And I know that Southeast Nebraska Development District SEND, they're also involved in the workforce housing, and I hope to have a meeting with them later this summer to talk about just that. So stay tuned for that. But yeah, I thank you for that question, because it is a huge issue across the state.
Yeah. Seems pretty obvious. If the people that are working in our factories and restaurants and retail stores can't afford, or there isn't adequate housing for them, well, they're going to go where there is. It would stand to reason.
I would just add that Twyla mentioned it too, that it's going to take a whole group of organizations, especially with today's construction costs, to get it done. It's like Blue Valley will not be able to develop and manage and do everything from A to Z on their own, like we used to be able to do 25 years ago. It just doesn't work that way in this day and age. But it is doable because other communities have done it, to where you have a nonprofit like Blue Valley, you get with the Housing Authority, you work with organizations like SEND and with your city administrators. That's how this type of project would get done in any community.
Fantastic. Great question. Great answers. Did you have something else? No? Yes?
One more thing. A wonderful way to help move this ball forward for lots of organizations. There is a housing needs survey out right now, and there's information in the community room, but encourage people to fill it out. Help us define, where the pain is being felt right now to help us. It doesn't matter which organization's pursuing it, but we need to be able to show the numbers of where the need, why we're trying to pursue what we're pursuing, and that it's based in not an idea, but this is what is needed for the community. So that housing survey is important, but So to, I guess, again, the partnerships, because that's where this is, you know, the costs are just so high anymore that this is going to take a lot of people at the table to address this for Fairbury. And you know, you hear a lot of things about people growing along the I-80 corridor, but I've been studying their housing and what they've been doing for housing for years, and they've been solving their housing problem. If you look at York, and you look at Seward, and you look at these communities, they've been very aggressive in their housing efforts. And so it's our turn. I think we owe it to Fairbury to do that.
Okay. What other questions do we have? Yes, ma'am. Nope, it's you.
Is there like resources for low-income families to help them paint outside of their homes and fixing the sidings?
Blue Valley Community Action has a owner-occupied rehab program. Unfortunately, that list is long, and the need across, again, the state is huge. But economic development does recognize that, and our governor does recognize that. So Blue Valley did receive a grant for owner-occupied rehab. So I urge you to call and get your name on that wait list.
Fantastic. And I think that's true of so many resources. The need can certainly weigh heavily upon what those resources are, but it's good to know they're there. And while there might be a list, absolutely get your name on that list, and hopefully we can get you the help you need. What other questions are there? Yes, sir.
From what I'm hearing, you all got pretty good programs for just about everything. There's light, water, heat, rent, all that good stuff. Most generally, when people can't pay those bills, it's because they've lost a job for one reason or another. Whether they quit or whether they got fired, but they've lost a job. Do you have any programs to train people for different jobs? Do you have any programs to help them find a job?
That is an amazing question. So we offer some coaching. I mentioned earlier we have some digital literacy skills. We work with North Star Digital Literacy Program where that could help fill a niche where they can get some certifications too that could potentially give them some skills to obtain jobs. We also partner with the Department of Labor and send referrals to them as they have some really great employment training programs as well.
At Blue Valley, we don't have necessarily employment programs, but we do have certified case managers who work with individuals who have lost their job or have had limited employment history or have a poor employment history. And that involves working with them one-on-one, working with the individual to kind of get to the core of why that is. Now, sometimes it's just you lost a job because the businesses can't afford you, or you overslept one too many times. There may be some simple explanations, but for those that have the lengthier history and some pretty big obstacles and barriers, we work with them to try to figure those out and move past them. What can we do to make you ready to join the workforce? And once they get to that point, then we work with them to look for employment that could match their skills or things. We don't want to set them up for failure. So if you have somebody who hasn't worked for 5 years and they come and they say, I want to go be a CNA at the hospital, I'm going to apply today, that's not realistic. So we want to help them, what does it take from this point to get you to Z, where you are hired as a CNA? And there's a lot of steps in between there. So we want to address those, work with them so that when they're done, they can be successful and get that job.
And I'd like to say also that the Nebraska Department of Labor has some fantastic programs as well. And two employees of the Nebraska Department of Labor actually, they are on our forum team to help plan these forums. So I would refer you to some future forums that I think might answer that question even more than we were able to tonight. The Department of Labor would certainly be able to address those concerns very directly. Are there any other questions? Yes, ma'am.
So do any of you know the total number of rental units in Fairbury, houses, apartments, everything, and what the average cost of that is?
Usually registered, the ones that are registered now, we know of. I can't do average cost, I don't know what the charge of tenants, but I'm sure they should.
I'm going to repeat that for benefit of our recording. We do not know the answer to that question here, but Mayor Brown said that he can get some information to you about that. And if you could provide that information to me, I will post it as well and make it available to all. Are there any other questions? Yes, sir.
Blue Valley had funding before for purchasing homes on, I think it was a homeowners occupied program. Now, is that still an option? And if so, is it also an option for new builds if they find within budget?
Well, we did have a program. It was a purchase rehab lease purchase program that we partnered with the city of Fairbury on. And unfortunately, those grant funds have been expended, so we no longer have funds available. However, I am looking at writing another grant application to the state to have another program because it was very successful and popular. But right now, we do not have the funding.
Okay.
With that one, would it be possible to have it written as new builds as well as rehabbing the homes?
I think that,
That's a possibility.
outstanding. Are there any other questions this evening?
This isn't really a question, but more of a statement. So I am with Lutheran Family Services in their Fatherhood Initiative program, and I just wanted to kind of let everybody know that we do have an employment specialist that we're still kind of building that program. It's changed from before, but they will work with dads to facilitate classes on like how to do resumes and all sorts of things. So that is an option that is coming to Fairbury as well. I have a couple of clients here in Fairbury that I provide other services to. So if anyone has any questions after this, let me know. But we definitely are growing our employment program. That's a focus that DHHS really wants us to work on with our dads to gain better employment.
Outstanding. Please reach out to us so we can help you make that information available to the residents of Fairbury and surrounding areas. Thank you. Yes, sir? Oh, well, we've now been told there are 465 registered
465 rentals that we know.
registered rentals that we are aware of. Thank you for getting that answer. Are there any other questions this evening? Yes, sir.
Again, probably not a real question, but a comment. I'm the commissioner here in Jefferson County that sits on the Senate board of the Southeast Nebraska Development District. And you're talking about OOR programs, owner-occupied rehab. Sandy was very active in that, but I think DED is discontinuing the funds for that, unfortunately. And so, yeah, you're working with grant money. The other programs, yes, there are programs that are very helpful, and everyone is trying to work on affordable housing. I'd like to see a definition of what is affordable housing. So,
First, let me address the owner-occupied rehab program. Now, the State Department of Economic Development, they did have two different types of rehab programs. One was through the Community Development Block Grant, where communities would apply and then an administrator would manage the grant. They have taken all housing away from CDBG for the state. That was the state's decision. But there's also the Nebraska Affordable Housing Trust Fund, which is also handled by the Nebraska Department of Economic Development. They also have a housing rehab program, which is the program that we got and that SIND continues to operate. So, and I will add that I do communicate with SIND regularly. We talk to each other every year saying, what are you applying for this year? So if I know that SIND is applying for a rehab grant for the city of Fairbury, then he knows that I'm also applying for a rehab grant, but for Jefferson County. So then we can tell the state that we're collaborating, and SIND will take those from the city, and then we'll help the rest of the towns in the county. So, but that's a good comment. Thank you.
Right, and to address your question about what is the definition of affordable housing, if you do use DED standard, it's a good one because at every single price point there should be affordable housing options for that person, and that's both in the home buyer and the rental market. And so, you know, low-income households, which, you know, absolutely, there needs to be income-based, income qualifying guidelines for those housing options. But as you go through the different income levels, there needs to be availability, both in rental and home buyer. And that's where it gets complicated, because when we talk about affordable housing, a lot of times we define it this wide, but in all reality, it's a broad net, very broad net that we use to describe that everyone should have something within their price point.
Okay, that makes sense. I think we have time for one more question. Do we have a brave volunteer for one more question? Yes, please come forward. That's okay. Neither are we. Oh.
You guys didn't, this isn't like a help maybe anybody buy a house or anything, but is there any grassroots programs that you can talk about that maybe some of the people that have received some benefits could actually use some of their physical time to help other people, and maybe the city could provide some of the paint or the lawnmowers or something so that they can do that and help some of our veterans and maybe our older people?
Anything that you're aware of? I don't know that there's a program that does it. I think it's a fantastic idea, but I don't know that there's a program certainly that would require that or even suggest that. But gosh, you know, as somebody that has a story to tell, has a testimonial, has enjoyed one of these benefits, giving back. I bet there'd be a lot of people who would want to do that.
I mean, it would be a nice program, but I think I would want to transfer that to, Blue Valley Community Action, for one, but then also your faith-based community. And in all reality, you know, the gratitude that we all have because of the obstacles we've all had in our lives, you know, that should be an outpouring for all individuals. And I don't think it should be obligated to one demographic more than the other, but we've all had things that we've received in our lives that have been nothing short of a blessing, and we should want to repay that in some way. And yes, it'd be wonderful. So
The best questions are the ones that are hardest to answer,
Pastor
right?
Dave, what are you going to do?
Just Dave. Folks, I'd like to ask you to join me in thanking our panel of experts for giving us their time and so much great information tonight. As I mentioned earlier, there will be refreshments served in our fellowship hall right now. Our panel intends to join us there, so if you have more questions or conversations that you'd like to have with them, please feel free to join us for some refreshments and great conversations with good people. Thank you all for being here tonight. We really appreciate you coming out.